What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And the markets didn't do well today, guys, because we had the Russell 2000 going down 1.95%, Nasdaq went down 2.47%, Dow Jones, we can make the case that the Dow Jones broke even, it went down 0.08%, and the S&P 500 went down 0.87%. And if we take a look at the advances and declines distribution, we can confirm that we had a nasty day today, because most of the stocks went down. We actually had 4,700 stocks going down, whereas we had 2,600 stocks going up. And if we take a look at the sectors of the markets, we can have a better perspective, guys, of what happened today. Because we had a red day all across the board when it comes to the indices, but when it comes to the sectors, guys, we had 8 sectors having a positive performance today, led by financials, which went up 1.26%. And if we take a look at the best performing sectors today, we can easily notice that we had a rotation into the inflation trade, because we had financials, materials, and energy having a solid day today. And we also had a rotation into the defensive sector or into the defensive sectors of the markets, because we had consumer staples, healthcare, and utilities also having a positive return today. So yesterday, and you guys, I guess that you already know everything about what Mr. Jerome Powell said. Yesterday we had a very solid rally into the closing bell. The markets liked what Jerome Powell said. He pretty much let us know that he is not a hawk. The markets were a bit suspicious about Jerome Powell becoming a hawk, about Jerome Powell having negotiated with President Biden becoming a hawk in order to be renominated for president of the Federal Reserve, to be renominated as the chairman of the Federal Reserve. And he actually clarified during the press conference that that isn't the case. So we had a dovish Jerome Powell yesterday, and the markets went down today. We had the reopening trade getting crushed all across the board. Hotels, airlines, and also cruises or cruise lines also getting crushed. We still have COVID-19 cases rising all over the place. So the markets are still a bit concerned about Omicron. And I think that, I don't know, guys, when it comes to the reopening trade, I am starting to believe that the reopening trade is going to remain in a bear market for quite a long time. Because first we had Delta, now we have Omicron, and then we're going to have another variant of COVID-19, and we're going to have one variant after another variant. So I don't see the reopening trade doing well anytime soon. I think that the reopening trade is going to remain in a bear market for quite a long time. That's my opinion. So we had a rotation into defensives and into the inflation trade. And what happened today, guys, goes to show how important is the tech sector. So the tech sector went down today 2.81%, and we had 8 other sectors going up, including the financial sector, which is a very important sector inside the S&P 500 and the Dow Jones. And we still had a red day all across the board. And mind you, guys, tomorrow we have quadruple witching. Watch out for that. Remember, quadruple witching is a day that occurs 4 times a year, and that implies that tomorrow we are going to have a massive expiration of options, of indices, of stocks, of future markets. So that's a day in which we usually see a high volatility. So we all know that the hottest sector in the option markets has been obviously the tech sector. We have had a lot of people loading up on Apple calls, Nvidia calls, needless to say Tesla. So can this be a coincidence, guys? A day before quadruple witching, that we had the tech sector going down almost 3%, when we know that the hottest sector by far in the option markets has been the tech sector. So is it a possibility that maybe market movers that we know that obviously manipulate the markets today, carried out a shake-off operation in regard to most of the call options that expire tomorrow, in order to force most of the holders of call options that expire tomorrow to cut the loss today, one day before quadruple witching? Because if that were the case, then the market makers forced today a lot of call option holders to cut the loss, but tomorrow we might have the market makers bringing the markets up in order to force most of the put option holders to cut the loss, in order to have the greater amount of call options and put options that expire tomorrow to expire out of the money. So watch out for that, because this might not be a coincidence, the tech sector getting killed one day before quadruple witching. So maybe the shake-off operation when it comes to the call option holders that expire tomorrow was already carried out. So most of the market makers got rid of most of the call options that expire tomorrow, because they forced their holders to cut the loss. And maybe tomorrow we could have the inverse process, guys. The market's going up in order to have most of the holders of put options to cut the loss before the closing bell tomorrow. So watch out for that scenario. And we also had today jobless claims coming out. We already know that the markets are a bit desensitized when it comes to jobless claims, but today we had a positive sign, at least from what I see, because jobless claims came out worse than expected. We had 206,000 new claims, 18,000 fewer claims that, 18,000 more claims relative to the prior week. So that might be a sign that the economy isn't getting that overheated. So that was good news, but despite the fact that jobless claims came out worse than expected, we had a red day all across the board and a rotation day into the inflation trade and into defensives. Okay. Okay, now let's go ahead and take a look at some trades, guys, that I want to show you. You know that I didn't post any video yesterday. I went live on my Patreon, and it was a live streaming that lasted all day long. So at 4 p.m. I was extremely tired. So that's the reason why I couldn't record any video yesterday. So Crispr Therapeutics, guys, let me show you over here. This was the only trade that I actually took yesterday. So before noon, I purchased the $70 call that expires on April 14, and I paid $1,490. And thanks to the amazing rally that we had into the closing bell, I decided to close this position. Lucky enough I did, because today Crispr Therapeutics went down. So I was paid $1,690. So I ended up making over here $200 in yesterday's trading session. And today I took a loss. Let me show you over here. I have a screenshot, guys, of the loss that I took today on Ginkgo Solar. I had a cheap burger. So this morning I purchased 130 shares of Ginkgo at $48. I was thinking that Ginkgo was going to be able to burst above $48 and then fill the next gap up to $50. I was wrong. This trade was wrong, and I had to apply a stop loss. So I ended up cutting the loss at $47.12. I sold my 130 shares at this price, and I was paid $6,125. So I paid $6,251 in order to enter this trade, and then in order to exit this trade, I was paid $6,125. I ended up taking a loss over here of $126. And I also, let me show you here, ticker symbol MTTR, because today I sold 2 covered calls of Matterport, guys. Let me show you. So I sold, let me pull up here the trade itself, because I sold 2 covered calls of Matterport that expire on March 18, the 30-buck call, and I was paid $230 per every covered call that I sold, and I sold 2 covered calls. So I ended up making over here $460. So I made $460 selling these two covered calls of Metaport, but I had to take a loss on Jinko Solar of $120 each. So I ended up making today something like $320 in a red day. So I have nothing to complain about today's trading session. S&P 500 goes down today 0.87%, and it closed today's trading session at 4,668 points. Okay, guys, listen up. Take a look at this 4-hour chart. Clear uptrend. The S&P 500 is still trading above both moving averages, this 50 SMA and this 180 SMA on the 4-hour chart. Relative strength index, 51 points. There is absolutely nothing wrong with the S&P 500. The S&P 500 looks pretty bullish. So obviously, it looks like today we had a bull trap that maybe could turn into a bear trap. Sorry, guys, tomorrow if my conspiracy theory about the market makers, having the put option holders that expire tomorrow. The call options holders that expire tomorrow. They tried to have them cut the loss today because we saw a sizable drop in both the S&P 500 and the Nasdaq 100. I already told you that the hottest sector by far when it comes to the option markets has been the tech sector. So we can make the case that, or that's my theory, that at least I already told you that, that market makers are manipulating the markets in order to force today most of the call option holders that expire tomorrow to cut the loss, and they could do the opposite tomorrow. They could bring the S&P 500 and the Nasdaq 100 up in order to force the put option holders or the holders of put options that expire tomorrow to cut the loss before the closing bell. So if that were the case, so today we had a bull trap in the markets, but today we also might be having at the same time a bear trap if the markets happen to go up tomorrow. So watch out for that scenario. If I pull up here this 10-day, 30-minute chart, take a look at the spot, guys, where the bulls found support today. This is not a coincidence. 4,670 points. So I already told you, S&P 500 closed today at 4,668 points. So 4,670 happens to be a former area of support back from Monday. It also acted as lower support back on Friday of last week. It also acted as support back on Thursday of last week. And lastly, it also acted as lower support back on Tuesday of last week. So this was no a coincidence. The bulls managed to find support at a spot that they were supposed to find support at. So obviously for tomorrow's trading session, the most important area in technical terms, if we are talking about support, is going to be 4,670. If the bulls cannot hold 4,670 as lower support, then we might see another leg down to 4,610. 4,610 acted as lower support yesterday. It also acted as lower support on Tuesday, and we are also talking about an area of resistance that acted as such back on December 6th, and it also acted as resistance back on December 3rd. So watch out for these two spots tomorrow, guys. 4,670 as the main area of support or resistance, depending on the case, depending on what spot the S&P 500 happens to start the trading session at tomorrow. And if we happen to see a leg down, I am expecting support at 4,610. And if we take a look at the Nasdaq 100, let's see what is going on. Over here, Nasdaq 100 was nasty today, guys. It went down 2.61%, and it closed today's trading session at 15,863 points. So let me pull up here the 4-hour chart. And clear uptrend. We are trading between both moving averages, 50 SMA and 180 SMA on the 4-hour chart. RSI at 43 points. So the NDX is still looking bullish. However, I am going to zoom in here on the 4-hour chart. Watch out for this 180 SMA on the 4-hour chart at 15,650 points, guys. Because if the bears happen to be able to break this moving average to the downside, then we are going to see a shift in momentum in the case of the NDX. 15,650 points also happens to be a former area of resistance that acted as such on multiple occasions back in September, and it also was an all-time high, an all-time high that was reached in the case of the NDX back on September 7th. So this is going to be a critical area of support for the Nasdaq 100 if tomorrow we happen to see another red day. And in terms of overhead resistance, the most important task that the bulls of the Nasdaq 100 are going to have to carry out tomorrow is going to be taking on 16,000 points, a previous area of support back from late November and also back from early November. So there is nothing really wrong with the Nasdaq 100, but if 15,650 points happens to be broken to the downside, this could imply that the NDX might be about to start a corrective phase, and that isn't going to be positive, obviously, for the bulls. Now let's go ahead and take a look at Fedex, guys. That should have already reported earnings, and I think that they beat on earnings. Jeez, yeah. FedEx is going up a lot after hours, guys. So FedEx went down today during regular trading hours, 0.94%, and it closed today's trading session at $238.52. So let me pull up here the 1 day, 1 minute chart so we can have a better perspective of what is going on after hours in the case of FedEx. So FedEx is trading, guys, or is up after hours 4.74%. This is a nice push to the upside, and it actually went up to almost $260. So I think that FedEx, I believe, guys, that the earnings report was very solid. So let's see what is going on in the case of FedEx. So EPS came in at $4.83, beating the estimate of $4.28, a nice beat on EPS, and sales came in at $23.50 billion, beating the estimate of $22.47 billion. But FedEx cannot be this up, guys, only on a beat on EPS and revenue. I might assume that they up-guided. FedEx is also announcing a buyback plan of $5 billion. Very good news for the shareholders of FedEx, because the pie is getting smaller relative to their ownership in FedEx. But where is guidance at? Let's see. Because according to Thinkorswim, they are saying that, that FedEx shares rise 6% on 2Q beat and a $5 billion buyback. But I suspect that FedEx up-guided for us to be seeing FedEx up this much after hours. So let's see if I have guidance over here. So let's see, FedEx raises full year 2022 adjusted EPS guidance from $19.75 up to $21.50 versus $19.64 estimate. So yes, they are up guiding, guys. They are up guiding EPS. They beat on EPS and revenue. So this was a beat all across the board. And on top of that, they are announcing a buyback of $5 billion. So very good news for the bulls of FedEx. So what could be potentially happening tomorrow? So take a look at this area, guys. $255 happens to be a former area of resistance back from mid-November and also an area of support back from mid-September. So I'm thinking that if the bulls, and take into account, guys, that FedEx is trading after hours at $252. So I'm thinking that if the bulls of FedEx can take on $255 and good volume and momentum, which could be the case, because FedEx is posting a very solid earnings report, I think that the next cap up to $270 might be filled $270 happens to be a former area of resistance back from early September. So if we were able to take a momentum trade on Fedex from $255 up to $270, we are looking at a 5% profit. So don't sleep on Fedex, guys, because as of now, the stock of this company is looking pretty bullish. We could even make the case that this 50 SMA on the 4-hour chart is about to burst above this 180 SMA. This could turn into a golden cross. Fedex, or on top of that, Fedex posted a very solid earnings report. And this is for the most part a blue chip stock, guys. And you know that when we have fear in the markets, this is a very well-established company. They are up-guiding. This is a company that is very predictable in terms of cash flow, in terms of revenue. So I think that there is a lot of upside potential when it comes to Fedex. And now let's go ahead and take a look at another stock that is reporting earnings today, Rivian Automotive. And in the case of Rivian, take a look at this dump, guys. And obviously, we are not expecting much when it comes to the earnings report of Rivian. Obviously, this is a company that isn't making any money as of now. And when it comes to non-profitable companies, the most important aspect that we need to take a look at is guidance and also revenue growth. But in the case of Rivian, obviously, we cannot expect any revenue growth because this company isn't making any money as of now. So Rivian went down today 5.33%, and it closed today's trading session at $108.87. So let's see what is going on over here. I am going to take a look at the loss, guys, of Rivian. I'm going to take a look at at how much money this company is burning as of now, and guidance. So where is guidance at? Okay. So Rivian shares are trading lower after the company reported Q3 earnings results and said it expects to be a few hundred vehicles short of its 2021 production target of 1,200 vehicles. So hold on tight, guys. Okay. So Rivian is a $90 billion market cap company, and this company is stating that they are not even going to be able to sell 1,200 vehicles, 1,200 vehicles in 2021. So watch out for these, guys. As of now, NIO is getting absolutely crushed. I know NIO is a Chinese stock, but NIO sold, guys, in November 10,000 plus vehicles in 1 month alone. And as of now, NIO has a market cap of something like $40 billion. So Rivian has twice the market cap of NIO, and this company is saying that they are not even going to be able to manufacture 1,200 vehicles in 2021. So this goes to show how how amazingly overvalued Rivian is as of now. This is a huge deception, no doubt about it. And how much money is Rivian burning? Let's see over here. So, okay, Rivian Q3 adjusted EPS. So the EBITDA loss was $727 million versus $281 million in the same quarter of last year. So they are burning way more money relative to last year. Last year they burned in the same quarter, guys, $281 million. And as of now, they are burning $727 million, almost like 300% more money being burned as of now in the case of Rivian. So this was a nasty earnings report. So obviously a 100-foot pole when it comes to Rivian. And yeah, that is just the truth of the matter, guys. I am not going to touch the stock of this company unless I see a huge correction, guys. I think that Rivian is due for a correction. I might think about purchasing or, picking up some shares of Rivian at $50, $60. But at these levels, with a company that has a market cap of $90 billion and that is saying that they are not even going to be able to manufacture 1,200 vehicles in 2021, this is a stock that is going to be definitely deleted from my watch list. And the third stock of this video is going to be Visa. And in the case of Visa, guys, Visa is reversing this horrible downtrend that we are seeing over here on the 4-hour chart. Visa went up today 0.97%, and it closed today's trading session at $214.37. And take a look at how here on the 4-hour chart is about to unfold a golden cross. You guys can see how this 50 SMA is about to cross above this 180 SMA. Relative strength index at 65 points. So I think that the second Visa burst above $215.50, the stock of this company is going to be off to the races, guys. I think that Visa has a first chance of filling the next gap up to $222, which happens to be a former area of resistance back from mid-November. And we are also talking about a former area of support back from early September and also back from mid-May. And by the way, guys, I have skin in this game. Let me show you. I have a call option. Let me pull up here Visa quickly. So I purchased, when did I purchase this call? Let me pull up the call option itself. So on November 12th, a few days before Amazon announced that they were not going to let people in the United Kingdom to use Visa to make purchases in Amazon, unfortunately, I bought this call like 1 or 2 days before that. However, I purchased this call option with an expiration date on February 18 of next year. This is the $210 call that expires on February 18. So I still have extrinsic value. And that's the reason why as of now, I have an unrealized loss over here of $75. And at some point, guys, this call option was absolutely, let me pull up here the 1 month chart. So at some point, guys, figure that I paid for this call option, and this goes to show how important it is to set expiration dates whenever we purchase options 3 or 4 months out. The further out that we can, because the further out you set an expiration date in the case of a call option, then the greater the extrinsic value that you're going to have on your side, and that gives you room in order to be partially wrong about the trade. That gives you room to be mistaken about the trade in the short term, but then you can end up exiting a trade, exiting an option trade, making money if the price of the stock goes down as soon as you purchase an option, either a call or a put option. So if you make a purchase, the stock goes down, but the expiration date is 3 or 4 months out, so you can be wrong about the trade immediately. But then, if the price of the stock happens to recover, then you can end up exiting the trade, making some money. So at some point, guys, the value of this call option went down to $4.63. And as of now, I have an unrealized loss of only $75. And I think, because the technical chart of Visa is looking pretty well, I think that I am going to be exiting this trade, making good money out of it. So I might also think about purchasing some shares, because this chart looks pretty well, guys. So check this out. If I happen to start another trade on Visa, once I confirmed from a technical standpoint that the stock of this company was able to burst above $215, let's say that I don't take this as financial advice, guys. Let's say that I pick up some shares of Visa at $216, and if I happen to be able to write them up to $221, I am looking at a 3% profit, guys, on top of the profit that I am going to be making with the call option that I just showed you. So watch out for Visa, guys. I truly believe that if the bulls can take on $215 on good volume and momentum, Visa is going to be off to the races, in my humble opinion. And now let's go ahead and take a look at the very last stock of this video, Amc Entertainment. And this is going to be a quick one, guys. AMC went down today 0.85%, and it closed today's trading session at $24.45. So let me zoom in here on the 4-hour chart, and it looks like or according to my opinion, guys, that the bulls of AMC are going to be able to take on $26, which is going to be the next important resistance for AMC. Keep in mind, tomorrow we have quadruple witching. This is a very hot stock in the option markets. So we can expect, AMC to be very volatile in tomorrow's trading session. So I'm thinking, guys, that if the bulls of AMC can take on $26, as I always say, on good volume and momentum, which could be the case, remember that $26 is a previous area of support back from December 10 and also back from December 3rd. So I think that they are going to be able to fill the next gap up to $28.38 or $28.50, a previous area of support back from mid-May. So if we were able to take a momentum trade on AMC, having AMC bursting above $26 and filling the next gap up to $28, we are looking at an 8% profit, nothing to sneeze at. So watch out for AMC. I think that the stock of this company is going to be very volatile tomorrow, and I think that momentum isn't gone, and we are very likely to see AMC filling the next gap up to $28 sooner rather than later. And with AMC, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Monday. Once again, 3 or 4 hours after the market closes. Peace out.